Hey everyone, in this video we're going over Rivian stock, ticker RIVN, Q4 2021 earnings report for them, and we're going to just go over what we think about the future, is it a good investment at the price it is currently, and all of that. But before we do, if you could smash the like button, it really helps the YouTube algorithm, and if you haven't subscribed to the channel, definitely subscribe. Now, I do have another video coming later this week that I did tease on Twitter about a stock I did buy a lot of, and we're going to go over that in a future video, but for now, let's stick to Rivian. At the end of this video, after we go over the earnings report, I am going to go over what I think of the stock price, what I think about the long-term prospects for the company, so definitely stay till the end if you do want to hear my opinions on it. Now let's get into it. Now this first slide I actually took last quarter, Q3 2021's key highlights, and I stacked them right next to this most recent quarter that came out today, Q4's highlights. Now I did this so we can easily just compare where they are now versus a quarter ago to get a little glimpse of how things are progressing. So a quarter ago they had 71,000 R1 net pre-orders in the US and Canada, and as of now it's about 83,000. Then they go over that there's 100,000 EDV orders from Amazon. That continues to be the case in this earnings report as well. They showed in a quarter ago that there was 200,000 annual capacity in the Illinois factory and 400,000 annual capacity for producing cars in the Georgia factory. They are showing now 600,000 total annual capacity. Basically, both factors together, nothing has changed there. They have increased the employee headcount to 11,500 plus from 10,000 plus, so an extra 1,500 employees working there this quarter. And there are still 3 vehicles, and the final last point is that they produced 2,425 vehicles as of March 8th, 2022, since the start of production. And this comes after we found out in the beginning of year in January that they had produced 1,000 vehicles. Now, this actually slide comes from Q3, not the most recent quarter, but I did think for anyone who is going to own Rivian stock, they should understand all the things the company does, so I did take it and put it in our slide here. It shows the different things that they do. For example, they're not just a car producer, so they do have obviously the products on the top, which shows the consumer car, the commercial vehicles, the accessories, but then beneath that, there's services, so the financing, the insurance, the vehicle service, membership and software, charging, fleet operating systems, vehicle customization, a resale program. Then it goes into product development and operations, so design and engineering, manufacturing, delivery, a service network, experience spaces, charging network, and customer service. Then they talk about Rivian Cloud, so this is digital commerce, operational management software that they have, fleet management, energy management, and then the vehicle technology itself, the vertical integration, so vehicle electronics, battery, electric drivetrains, chassis, Driver Plus, which is kind of like Tesla Autopilot, so their autonomy software they're working on, and experience management. So this is basically, and on the top and bottom ends, it says data and analytics. Now, they're basically trying to show that they're a lot more than just basically a company that puts together parts and throws their logo on it. They really do vertically integrate across the stacks. Now, the next slide we're going to get into is basically in their earnings report, they talk about how they crossed several major milestones in 2021. This includes starting production and deliveries of all 3 of their vehicles, the R1T, the R1S, and the EDV. Second thing was that Motor Trend's 2022 Truck of the Year was the R1T, so they're very proud about that. Then they launched a digital-first direct-to-consumer experience platform that allows them to manage the customer experience from the first time they view the vehicle online through the sale, delivery, service, and more. Basically, the software stack that they're building to be able to sell and deal with their customers after the sale. Introducing their fleet operating system digital fleet management solution for commercial customers, so basically software that companies like Amazon, or if they made a deal with UPS for these vans that they're going to have for delivering, the software they're going to use to manage the fleet of Rivian cars that they're going to have. So that's really a great thing that they are built out and are working on. Then making the natural world a stakeholder in the success by establishing and funding Forever by Rivian, which is an organization focused on addressing climate change, preserving the biodiversity needed for the planet's long-term survival. And this was funded with 8 million shares of Rivian common stock. They raised $13.7 billion of gross proceeds with their IPO, and they selected the site for their second U.S. manufacturing plant, which is just outside Atlanta, Georgia. Now, this was actually written in the earnings report. I thought we should bring a little attention to it. They said that our path to EV leadership won't be easy. In the immediate term, we are not immune to the supply chain issues that have challenged the entire industry. Those issues, which we believe will continue through at least 2022, have added a layer of complexity to our production ramp-up. We are working diligently and collaboratively with suppliers to identify and head off problems or constraints as quickly as possible. Now, I thought this was pretty important because even though they produce such a small amount of cars, they really are barely touched the surface in production, and even they are dealing with production delays, supply chain issues, things like that. And it's only going to get worse as things continue to ramp, but management does understand the issue. They made a point during the earnings call to say that they are working their best to make sure things like this don't happen going forward. And they are going the Tesla path. And this is basically what I call the Tesla path, being full vertical integration across everything. Now, this paragraph during the earnings report really stuck out to me and made me believe, yes, they're going the Tesla path. And I'll just read it to you and then we'll go over it. And it says, during the next 12 months, we'll remain focused on ramping up production at our plant in Normal, Illinois, as well as initiating work on our second domestic manufacturing facility in Georgia. We'll also continue significant investments in our next-generation vehicle platforms and in-vehicle technologies, including our proprietary 800-volt architecture, which includes a new in-house family of drive units for both dual and quad motor configurations. This 800-volt architecture also includes an integrated onboard charger, DC to DC converter, and DC to AC converter, where the power stages of the DC-AC and the AC-DC are bidirectional and share semiconductors, magnetics, and the controller. We are also developing a heat pump based thermal system for improved cold weather efficiency, as well as a range of new battery packs, including both high nickel and lithium iron phosphate (LFP) chemistries. We also continue to develop our portfolio of charging and energy products to expand beyond the DC chargers for both Rivian Adventure Network and fleet charging to include our bidirectional home charger and home energy products. Beyond powertrain and charging systems, we are also developing an improved network architecture and simplified electronics topology, more powerful infotainment processing, expanded autonomy perception sensors, and our next-generation autonomy compute platform. We believe that these investments will increase the capability and value proposition of our vehicles for our customers while also delivering improved unit economics for Rivian. Now let's get into that. All right, so first, they're making this 800-volt architecture, so they're trying to do things in-house. The DC to DC and the DC to AC and the AC to DC bidirectional converter is basically saying, and they even mention it, that it can act as energy storage. The car, so let's say your house needed power, you could send power from your battery pack of your car into your house. So the power transfer will go back and forth, not just one way. They then go over the heat pump-based thermal system that they're building for cold weather. And if this isn't the biggest sign, like Tesla's heat pump was a huge thing. If anyone followed the Tesla Sandy Munro teardowns where they kind of just went over, everything Tesla was building, one of the most impressed things Sandy Munro found in Tesla cars was their heat pump. He thought it was incredibly built. So I'm very curious to see this heat pump that Rivian's building and how it stacks up. Hopefully Sandy Munro will do a teardown when that eventually does come out. But it shows that they don't want to just buy parts from other companies and put them in. They want to make as much as they can margin-wise, and also not just margins. When you control everything, you kind of control your own destiny. So if they're going to build the products, they're going to make the products better than the ones that they can personally buy. It's going to be made specifically for the cars that they're making, and it's going to cost them less because they're going to be producing it directly and not having to buy them from someone who needs to make money. So that goes for all vertical integration, basically, but heat pump, that immediately made me think of Tesla. Then they talk about both high nickel and lithium iron phosphate, LFP, chemistries. This is exactly out of Tesla's book. Tesla has the high nickel for extremely long range that they talked about how it's so important, high nickel. And then they have LFP for cheaper vehicles. LFP is still great, holds a lot of charge. These things basically are coming right out of the Tesla book. Now, obviously, if it's the correct path, who cares what book it comes out of? Whether Tesla thought of it, whether they knew it the whole time, it really doesn't matter. What matters is that they both, Tesla and Rivian, do the correct things. And clearly, this makes me think management knows what's going on and understands what they need to build. So this was something I was very happy to see. They then go on to talk about how they continue to build out the charging infrastructure. Obviously Tesla wants to run their own charging infrastructure with the Tesla Supercharger network. So this has the Rivian Adventure network as well as fleet charging for their partners. Obviously, I think that's an amazing idea. If you've heard me speak about Tesla at all, I think that is a key differentiator across the rest of the auto business, because the rest of the business is relying on third-party charging infrastructure, which if you've ever went to it, they don't work half the time. They're slow chargers. There's so many issues. I drive a Tesla, and if it wasn't for the Tesla charging network, I wouldn't be driving a Tesla most likely. And Rivian knows that they need to control their charging network to make sure that customers have a good experience and aren't going to have range anxiety and things like that. So extremely impressed that they are doing that themselves, and I think that is the correct path. They then go on to talk about not only building their powertrains and charging systems, but also developing improved network architectures. They're also trying to make more powerful infotainment processing. So we saw in the refresh Model S and X how they put in a better processor to handle high-end video games and things in Teslas. And clearly Rivian is thinking along that path. They want to basically have the infotainment system able to handle enough processing and graphics, I'm sure, and things like that. They also talk about expanded autonomy perception sensors. Now, I don't know if that means they're going to get into LiDAR or if they're building a system that's vision only like Tesla will be, or where they're going to take their autonomy project in the future. But they are talking about they have a next generation autonomy compute platform. So they are taking autonomy seriously going forward. They're going to want to compete. And it clearly seems Rivian understands autonomy is going to change everything, and they have to be ready for it, whether that means building it all in-house, which is what I think they are going to do, or partnering with the right partners if they need to do so. Regardless, they want to be fully vertically integrated, and they are ready for everything that Tesla's doing. They're basically saying, hey, we're going to do it too. And I really have not seen a commitment like this where they are really, from any automaker, where they have described that they are actually going to do in-house these individual things that are just so laid out, the Tesla path, I'll call it. It really does show that Rivian is in a class of its own versus everyone that's not Tesla. They really are, they do get it. That's the bottom line. They understand what needs to get done, and it seems like they're going to do it. They then talk about the production progress. They say how by the end of 2021, they accomplished their primary objective of certifying and starting deliveries of their first 3 vehicles. Both vehicle platforms are the tip of the spear for the brand and play an important role in establishing the relationship with customers and the world. So they produced 1,015 and delivered 920 vehicles for the full year of 2021. Now turning to the progress of the quarter of 2022, the plant's starting to ramp nicely despite the quarter getting off to a slow start and persistent supply chain constraints. Now, through the first half of Q1 2022, they experienced several headwinds and other factors impacting their product roadmap. And this include a planned 10-day shutdown to fine-tune their production lines, significant supply chain limitations, a spike in C-19, severe winter weather in central Illinois, and like the rest of the industry, they anticipate supply chain challenges to persist through 2022, and they are working closely with their suppliers to identify component constraints early so they can support the supplier's ramp and or develop alternative solutions if they need to. They then go on to say that they're focused on the production ramp, that they're encouraged by the team's progress, that this is reflected in the strong recent week-over-week production rate growth, wherein their output has been constrained primarily by supplier constraints, and the critical production areas of the plant, including battery module, general assembly, skateboard assembly, body shop, and paint shop, continue to each set record weekly production levels for Rivian. Now, during the 2 trailing weeks prior to March 8th, they averaged a weekly production rate that was approximately 2 times the exit rate of Q4 2021. As of March 8th, they have produced 1,410 vehicles in 2022 and 2,425 vehicles since the start of production. The parallel development and production of their R1T, R1S, and EDV vehicles has also led to beneficial synergies as we take learnings from our one program and apply them to the others, they say. They also continuously are improving as they refine their manufacturing operations and believe the core processes and equipment within the plant position them to achieve a successful continued ramp-up. Their focus remains on achieving the highest possible level of customer experience, production, and quality, as well as ensuring the health and safety of their employees. They then go over the product specs. Now I'm just going to show you a quick sheet of the product specs. We won't go too much into it since you can just look up the specs on their website anytime you want. But the R1T, the truck, they have a standard, large, and max battery. For the dual motor, for the quad motor, they have a large and a max battery. The range goes from 260 miles plus all the way to 400 plus miles. And as far as speed, 0 to 60, towing, horsepower, torque, basically, if you get a dual motor, regardless of battery size, it's all the same. If you get a quad motor, regardless of battery size, it's all the same. And when it comes to the R1S, they have a standard and a large, but no max battery option for the dual motor, and they just have a large for the quad motor. Now, the continuous software enhancements. They write that the fleet of delivered vehicles is also benefiting from the continued efforts of their software development team, with the improvements and/or new features being added through in-vehicle over-the-air updates. These over-the-air updates include everything from bird's eye view camera, improved infotainment, refined level 2 self-driving features, improved climate control efficiency, enhanced driving dynamics, and improved user interface. The in-house controls of their software stack and the associated hardware platforms enables them to deliver meaningful, regular over-the-air updates. This is a huge thing that other automakers need to get on if they want any chance to compete. Tesla obviously pioneering updates in the car. We know when you have a phone like an iPhone, for example, and you get an update, your phone improves. There are new things that you unlock with every update. And for whatever reason, cars just were not getting updates. They weren't smart, in quotes. Tesla made cars getting updates a thing. When I got my first Tesla, it couldn't park on its own, and then it got an update, and all of a sudden it could park on its own. It learned new things. So when you get a car that has over-the-air updates, it is the worst it's ever going to be as far as intelligence-wise and things it understands and can do the day you get it, and it will only get better from there. It's such a difference, and it makes such a difference compared to legacy automobiles. So Rivian doing over-the-air updates is obviously the right path and the right move, and it shows they are serious about software. They then talk about their strong partnership with Amazon. At the end of 2021, they sold the first production EDV to Amazon, and since then they've continued production at their plant. The bring-up of their manufacturing lines for the EDV has been smoother than the R1T or the R1S. This is because those lines benefited from the collective learnings from the R1 line, and while the line ramp has been positive, the ramp of production has largely been gated by a number of supplier constraints. Their team has been increasingly focused on working with these suppliers to achieve their needed ramp. Now, during this time, they've also been working in close partnership with Amazon to refine the digital integration of the EDV as well as their software platform to support the most effective operation of the vehicles. They intend to scale production and deployments in the second quarter of this year. And as they progress through these significant milestones, they are also in the process of exploring ways to further expand their commercial partnership with Amazon. So they are hinting at possibly further expanding that partnership. What that means will be interesting to see. But clearly Amazon, has a big investment in them, and I wouldn't be surprised to see more deals coming. Now, in December, they launched the RCV platform with the EDV 700, which is their first vehicle that's being delivered to Amazon. Since then, they've successfully produced pre-production EDV 500 vehicles, as well as a European version of the EDV 500 in their Normal, Illinois plant. The EDV 500 is a narrower and shorter version of this EDV 700, and an important vehicle for expanding to markets and geographies for which smaller form factors are better suited. So the design and production of the EDV 500 highlights the benefits of their common vehicle technology platform. From a hardware perspective, many of the components are shared with the EDV 700. Additionally, the learnings gained from the production of our EDV 700 will be applied to the EDV 500 as they begin production of saleable units in 2022, which is this year. So this is clearly something they're focused on and ramping. So strong pre-order base and their commercial roadmap. So pre-orders as of March 8th, 2021, they had approximately 83,000 R1 pre-orders from consumers across the US and Canada. all of which have been attracted exclusively through earned media, owned media channels, and word of mouth without the use of traditional paid media. Now, just a side note, that is just like Tesla. Tesla has not paid for any advertisements, and Rivian is basically showing that they have not needed to pay for advertisements either. The product speaks for itself. The word of mouth is what is selling this product. Now, pre-order since March 1st pricing announcement continue to accumulate at approximately the same rate, indicating that the new pricing model, because they did increase prices for what you're going to get less for what you thought it would cost, or you can get more now for a higher price. So even with the pricing announcement, they still are getting lots of orders coming through, the same kind of what they were expecting before that, showing that the product is very, perceived very well, and the pricing increase isn't affecting demand right now. So service, providing a seamless, comprehensive service solution is a core element in their direct-to-consumer offering. Rivian Mobile Service, another tie just like Tesla, the Tesla basically roadmap, Tesla has mobile service where they'll come and handle a service appointment at your home, at your office. And clearly Rivian wants to do that as well. It seems like it's, it obviously is a better consumer experience. And if you can do it, it's probably also a very cost-effective way to have a large-scale mobile service, a large-scale service center basically across the country while building out physical service centers as well. So to get back to it, Rivian Mobile Service, Rivian Service Centers, and app-based notifications and alerts and in-vehicle over-the-air software updates are designed to provide convenience, comprehensive access for Rivian owners over the lifetime of their purchase. As of March 8th, 2022, they had 15 Rivian Service Centers opened and a fleet of Rivian mobile service vans in operation. They believe they're fully equipped to meet the service needs of their consumers and commercial customers, which is great. We do know that Tesla, obviously at certain points, did not have enough service for how much cars were getting out there and how much service was needed, but they quickly expanded it. It's important that Rivian stays ahead of the game on that as they ramp, and it seems like they do have it at top of mind. When it comes to sales and delivery, their digital transaction process eliminates the hours traditionally spent at a third-party dealership. So like Tesla, no dealership, keep the margins for yourself, direct to consumer, and a better experience for consumers as well. So basically, they don't have to go to a dealership. It allows Rivian customers to complete their orders at home, basically in as little as 15 minutes, so similar from Tesla's website. If you go to any other automaker and you try to buy, let's say you go to a BMW website and you try to buy a BMW, you are not going to be able to buy a BMW. I'll just tell you that now. You're going to have to go see a dealership. It is a long and annoying process, whereas buying a Rivian on their website is as easy as going to apple.com and buying a laptop if you wanted one. So very, very simple process. This includes securing insurance, financing, title, registration, and trade-in appraisal. Customers are also able to schedule a home delivery. They're proud of the tremendous amount of care they invested in the delivery experience and training of their delivery field specialists in all aspects of their vehicle, technology, and service offerings. So obviously, sales and delivery are a big part. This is a direct-to-consumer EV, better margins than when you are working through a dealership, and obviously better customer experience, which we discussed a moment ago. And basically, it makes Rivian a bigger company. When people compare companies like Tesla or Rivian to other automakers, you have to realize they are a much larger company in the sense that they are handling a lot more of the processes. They are not just putting the car together, putting their logo, send it to a dealership, and that's it. Their relationship continues for the lifetime of the vehicle with the customer. Now, they have delivered over 900 vehicles. The total revenue, we're going to get into the numbers now, for Q4 2021, this past quarter, was $54 million. That was driven by the delivery of 909 vehicles. And for the fiscal year of 2021, total revenue was $55 million, supported by 920 vehicles. So basically, they just started producing vehicles. 909 out of the 920 total vehicles they've ever delivered were delivered in this quarter that just ended. Gross profit, they generated negative gross profit, so obviously they are not going to be making money while they are producing and delivering such small volumes in a factory that is built out to do high volume. So they generated negative gross profit of $383 million for Q4, and for fiscal year 2021, they generated negative gross profit of $465 million, as they produce vehicles at low volumes on production lines designed for higher volumes, we will have continued to experience negative gross profit related to significant labor and overhead costs. This pressure on gross profit from limited volumes will continue in the near term, but they expect will improve on a per vehicle basis as production volumes ramp up faster than future labor and overhead costs increase. When it comes to operating expenses and operating loss, total operating expenses for Q4 2021 grew to $2.071 billion as compared to $353 million in Q4 of 2020 a year ago. For the fiscal year of 2021, operating expenses grew to $3.755 billion. This is compared to $1.021 billion in 2020. In Q4 2021, their most recent quarter, they recognized a significant non-cash stock-based compensation charge of $554 million in operating expenses. The performance-based vesting conditions were deemed probable at the time of their IPO, resulting in the first time they recognized stock-based compensation expense. There was a net loss, obviously, so our net loss for Q4 2021 was $2.461 billion as compared to $353 million of a loss for the same period last year. The increased losses as compared to Q4 2020 were due primarily to the higher operating losses discussed above. For fiscal year 2021, they recorded a net loss of $4.688 billion as compared to a loss of $1.018 billion in 2020. So basically, the bottom line is that they are losing a bunch of money, but it is because they are still ramping. They are still extremely, extremely small production, and they have to ramp to hundreds of thousands and then millions of vehicles. Auto manufacturing is an extremely difficult business, and when you are trying to ramp, basically you have all these fixed costs that get spread out across all the cars you make, per hour, per day, however you're going to divide it up. And in that quarter, those costs that remain stable, fixed costs, if you only make 1,000 cars instead of 1,000,000 cars, for example, you basically have to spread the cost across the 1,000, and you're no longer making a profit. Your gross profits on those cars are not, you have none. They're losses. So that's what's happening with Rivian. It's to be expected. This isn't a surprise in any way or form. And I do think that eventually, as they grow, like Tesla did, they will eventually be a very profitable business because of all the vertical integration they're doing and the direct-to-consumer path versus the dealership path. So I do have faith that they will eventually be a cash flow positive business, and they do even guide to 10% free cash flow targets for the long term and 25% gross margins for the very long term. Now, to continue their numbers, their adjusted earnings before interest, tax, depreciation, and amortization was basically a loss of $1.108 billion, and the net cash used in operating activities, for Q4 was $1.086 billion compared to $268 million. Capital expenditures were $455 million. This represents an increase as compared to the same period last year, due to primarily our continued strategic investments in infrastructure. They continue to build out their plant in Normal, Illinois, investing in corporate workplace, lab facilities, service operations, experience spaces. In the fiscal year 2021, their capital expenditures were a total of $1.794 billion. And lastly, let's talk about liquidity and free cash flow, and then we'll get into the next parts of this presentation. So liquidity and free cash flow. They ended Q4 2021 with $18.423 billion in cash, cash equivalents, and restricted cash. This is a ton of money for the balance sheet. This is one of the things that they were able to benefit off of Tesla's success and be able to raise money and have such a huge IPO. This is something that would have never happened if Tesla wasn't such a massive success, in my opinion. But because it was, they are able to capitalize on it and have a ton of money that they were able to raise. So this $18.423 billion of cash, cash equivalents, restricted cash, and this excludes the capacity under their asset-based revolving credit facility. They define free cash flow as net cash used in operating activities less capital expenditures, and as stated above, the larger year-over-year net cash used in operating activities in combination with higher capital expenditures resulted obviously in negative free cash flow for now. Negative free cash flow of $1.541 billion for Q4 2021. This is compared to a negative free cash flow of $574 million during the same period in 2020. Additionally, Free cash flow was a negative $4.416 billion for the fiscal year 2021 as compared to a loss of free cash flow negative $1.762 billion in 2020. So increasing amounts of free cash flow bleeding from the business as they try to ramp and build this business out. So the 2022 business outlook. We're obviously in 2022, and they are going to go over what they feel projections for this year to be. So over the course of fiscal year 2022, they plan to remain focused on ramping up production of the R1, the RCV lines in Normal, as well as investing in their technology, their product portfolio for future growth. And they believe that the throughput in 2022, the supply chain will be fundamental limiting factor in our total output for the Normal factory, and that their manufacturing equipment and processes would have the ability to produce enough vehicles to deliver over 50,000 vehicles across their R1 and RCV platforms in 2022 if they weren't constrained by supply chain. So their confidence comes from demonstrated performance of their processes and equipment, which is in line with their expectations. Despite this, due to supply chain constraints currently visible to them, they believe they're going to have sufficient parts and materials to produce 25,000 vehicles across the R1 and RCV platforms in 2022. They continue to work with suppliers and look for engineering solutions to help us combat any anticipated supply chain issues. So they're targeting 25,000 vehicles. They're targeting adjusted earnings before interest, tax, depreciation, and amortization of a loss of $4.75 billion, with capital expenditures at $2.6 billion for 2022. So obviously, until they ramp to much higher volumes than producing 25,000 vehicles, they're going to be losing money for a while. So if you are looking for a company that is producing a healthy amount of cash flow, Rivian is definitely not for you. This is definitely a long-term investment. We're going to get into that a little more. But before we do, let's just quickly go over assets over liabilities. Their current assets as far as 2021, December 31st, came out at $18.559 billion with total assets at $22.294 billion. This is a huge amount of assets for such an early stage company, and when you're talking about it against their liabilities, I mean, this really gives them the cash they're going to need for the future years to build, because their liabilities are nothing in comparison. Current liabilities, total current liabilities, $1.3 billion. Against the $18.5 billion of current assets, because they raised so much money, it's nothing, easily handleable. And their total liabilities, $2.78 billion, also nothing even against, forget their total assets, their total current assets can handle their total liabilities, current and long term. So the stock, Rivian is down huge on earnings. They are down 6.35% in the trading day, and then another 12.44% at the time of this recording in after hours, hitting a 52-week low now of $36.04 at the time of this recording. Their 52-week low as of a trading day, not including after hours, the last one was $39.77, with their high for the year at $179.47 a share. So they were trading between 39 and 179, obviously coming down from that 179 since IPO, and they now in after hours are trading at $36. I mean, it is the lowest this stock has ever been. Well, at least as a publicly traded company. Now, after hours pricing is bringing that market cap to around $32 billion. And just to get an idea, when Amazon invested in Rivian in the private markets, when this wasn't a public company, they invested $3.8 billion at around a $19 billion market cap. Now, the reason I get $19 billion is because I did look it up, and it said that the $3.8 billion represented approximately 20% ownership interest in the company. Now, if I'm wrong, someone pointed out to me, but that was the first thing I found when I looked it up. So I'm taking it that they invested basically at a $19 billion market cap, and today it's around $30 billion. So we're talking about 50% more than what Amazon paid for it, but they now have a partnership with Amazon, and their factories are a lot further down the road, and you know, obviously, they have a ton of cash from the IPO raising it. So, you know, they obviously shouldn't be worth $19 billion today, in my opinion, just because of the amount of cash on their balance sheet and the amount of money it would take to get to the point they're already at. And at $32 billion of market cap, if you are in it for the long run, things are starting to look extremely interesting. And I'm going to give you my thesis on why. So let's just start with, where is Rivian in their journey? Well, Tesla in 2012 delivered 2.65 thousand cars. This is similar to where Rivian's production is currently. And Tesla in 2012 had a market cap of around $4 billion. So obviously much, much less than Rivian's $32 billion. But Rivian has far more cash and partnerships with Amazon, and it's a different time basically than in 2012 as far as consumers, interest in EVs and things like that. Now, Tesla 1 year later, from 2012, in 2013, delivered 22.4 thousand cars, from 2.6 thousand to 22.4 thousand. This is extremely similar to Rivian's target. Rivian's going from around 2 point something thousand cars to this year, 2022, expecting to do 25,000 cars. Tesla went on to produce the following numbers. After they did 22,000 in 2013, they did 31,000 in 2014. They did 50,000 in 2015, 76,000 in 2016, 103,000 in 2017, 245,000 in 2018, 367,000 in 2019, 500,000 in 2020, and in 2021, sorry for the mistype there, they did 936,000 or so. So it took 5 years from Tesla to get to 100,000 plus deliveries from a similar point to where Rivian is right now. But as I said, there's a huge difference between Rivian today and Tesla in 2012, and that's the consumer adoption rate for EVs has changed massively. People want to buy EVs more than ever today, versus in 2012, I don't know anyone who was buying an EV. I really didn't know many people interested in them, and Tesla kind of changed the idea of an EV not just being like a golf cart, but actually being a superior car to an ICE car. So Rivian has this new factor of so many people looking at EVs that weren't back then. So if they're able to ramp faster than Tesla, because Tesla may have personally not ramped as much because they had to only make as many cars as they knew they could sell. Now they have always played the car that they were always been, supply constraint, but it will be interesting to see how the ramp for Rivian goes forward. And also, obviously, Rivian has a lot more cash at its disposal. Tesla had close, encounters with bankruptcy at a few points, and it is important that, to note that because Rivian, with all the cash, can do things at a faster pace without worrying about that in the short run. So let's go over what Rivian is doing right. First, direct to consumer. That is the right path. Skip the dealership model, keep the margins. Second, vertical integration. Own your own destiny, better margins. Third, building the charging network. Give a reason to buy a Rivian over any other EV when you know that you have no range anxiety by high battery range vehicles, but more importantly for road trips, having the correct charging network for your car. 4, building the ecosystem. We're talking about the energy system. We're talking about fleet management, basically the entire ecosystem around the car. It's what Tesla does with Tesla Solar. Obviously, Rivian's not doing solar yet, but they are doing energy and fleet management software, etc. 5, software as much as hardware. So we're talking about over-the-air updates, things like that. They clearly understand that the importance of software is just as important as the importance of hardware when selling a car today. 6, the Amazon partnership. This is giving them validation for the commercial side of the business, something Tesla really hasn't pushed that much. Obviously, people are getting Teslas for cabs and things like that more and more we see, and even police departments. But as far as delivery, a partnership with Amazon is the best person to have a partnership with. And I wouldn't be surprised if eventually we saw more partnerships with companies like FedEx or UPS or something like that. 7, they have great management. They're founder-led. RJ seems like, he really knows what he's talking about. He's extremely passionate, and I think that's, extremely important to be a massive, successful company. Next, the horizontal IQ test, I call it. And this is something, it's funny, but it's really not that funny when you realize how many are failing it. So let's go over the horizontal IQ test. It truly shocks me how many new EVs from automakers are trying to compete with Tesla but don't understand this simple thing. Tesla originally had a vertical display in their Model S and X. They soon realized as autonomy becomes a thing, you're going to want to be entertained. We're talking about games, streaming, Netflix, things like that. And these things are optimized for horizontal displays. We're talking about a TV, for example, a computer screen. They're horizontal displays. So the entire Tesla lineup has moved to horizontal displays because you're going to want to use them for entertainment. Now, this was obvious when the Model 3 and Y where it had horizontal displays and you can play games on them or watch Netflix on them, versus the old Model S and X, and it had a vertical screen, which you can see on the bottom left in that picture how it was. If you watch Netflix on it, you would just see a basically small Netflix screen with a huge amount of black above and underneath it on that massive vertical screen. It just was not optimized because entertainment's optimized for horizontal displays. Now, when Tesla refreshed the Model S and X, they obviously put horizontal displays in them. Now, even before autonomy becomes a thing, people are currently watching Netflix or playing video games while they're charging in their Teslas today. You can use the screens for entertainment, for work, for different things today when you're charging or you're at home. It doesn't have to be when it's full autonomy. And vertical displays tell me that management has no understanding that the car is becoming more a computer on wheels rather than just a car, and they are making their infotainment systems basically outdated on the day of launch, in my opinion. So I know some of you might disagree and you might be thinking of just as a car, but in my eyes, the car is basically a piece of technology. It has become a computer. The same way a phone used to be just a phone, you would dial numbers and call someone and that was it. Maybe you got text message, whatever. Now what is it? Your phone? It's a computer. You use it for the internet, you use it for apps, you use it for everything. It's the same thing that is happening with the car. Now, a perfect example of a failure of the horizontal IQ test is Polestar. Look at this Polestar car in the center. It has a vertical display. They could have went horizontal. They could have went vertical. They chose to go vertical. Now, it's possible that they're doing this with Android's operating system, so maybe Android themselves is really only built for vertical. I don't believe that to be the case. I do believe that Android has operating systems for horizontal displays, so I don't know whether it's a choice or not or why Polestar went this way, but it shows that they are thinking currently and not thinking, into the future. And the truth is, it's really not even that much into the future. You can buy an extremely cheap tablet from Amazon that has the ability to watch Netflix. Why should a tens of thousands of dollar car can't do the same and a better experience? And I'll tell you now, it's not a better experience if it's a vertical display. So what is it worth? That's the bottom line we have to get to for Rivian, and this is a tough question. Rivian has a lot going for it, except its current fundamentals. They lose a ton of money, and this will continue to happen for a long time, in my opinion. So investing in Rivian is taking a bet on management to execute on extremely long-term goals. I believe it's clear that all new cars sold in 2030 are going to be electric vehicles, and it's possibly going to be sooner than 2030 in my opinion. Now, I do not think that Rivian is going to be as big as Tesla will ever be, and that's because in my opinion, Tesla is more of a robotics AI company disguised as currently as a car company. Now, that said, I do think Rivian, from their cars alone, can be a 10x investment from these levels. Now, I don't think it's going to be a multi-trillion-dollar company like Tesla will be, in my opinion, but I do think they can be a few $100 billion company. I wouldn't be surprised if Rivian eventually was a $300 billion company. And I think being able to invest at a $30 billion market cap and sitting on this investment for, let's say, 5 to 10 years while the world is transitioning to EVs could be an extremely profitable endeavor. So if you own the stock, be prepared that the stock could go to 15 billion. It could get cut in half, and maybe after it gets cut in half, it could go to 100 plus billion. Who knows? Because the truth is there's no fundamentals. They're losing a ton of money. And when you have no fundamentals, you really can be valued at almost anything. The market, the stock market is going to choose based on how many people want to ride this out with you. So be ready to be in it for the long run if you choose to invest. Understand it is possible for this company to go to bankruptcy. Other car makers have went bankrupt. Most car makers actually, before Tesla, went bankrupt that tried to succeed in the recent past. So, these are just extremely important things to know. The auto business is extremely difficult. It's been almost guaranteed that a new auto company would fail until Tesla succeeded. And I think because of Tesla, Rivian is getting the benefit of the doubt. They're able to raise a lot of money. The mass amount of cash on hand gives me the belief, though, that they're going to be able to ride out the pain of scaling a car factory, which will allow them to ultimately, in my opinion, succeed. They also don't have to deal with dealerships, so the margins of the business, like Tesla, have an advantage over legacy auto companies. And when I ask myself what car I would buy if I had to buy an electric vehicle that was not a Tesla, the only EV I'd personally consider would be a Rivian. Now, to me, that says a lot. I do own a lot of Teslas. I have 3 Teslas right now. I personally don't plan to buy a Rivian. And that's because I'm not really a pickup truck kind of guy. But if I did want a pickup truck and I didn't want the cyber truck, Rivian fits the need for a good looking pickup truck that's not, a cyber truck. And Rivian also has a head start with its van and can partner with companies, like they are with Amazon, and we'll see how that unfolds. That's something that they're able to do while Tesla is focusing really on just consumer cars for the main part of their business right now. Now, lastly, I do believe the price of the stock has declined massively, and this gives a small chance, there is a possibility that Amazon could just come out and buy them outright. And this is becoming an interesting thought because people used to say about Tesla that Google could acquire them, could backstop the stock if it went down too much, if they got cheap enough. And it kind of acted as a barrier for the stock in a way, knowing, around the $30 billion mark, that Google might acquire them if they got too cheap. And I believe that is the case for Rivian with Amazon. Amazon already has about a 20% stake. And if they're going to have this big 20% stake in Rivian, and they clearly like the space, they bought a company, Zoox, for autonomy, they invested in Rivian. And it's no surprise that, Bezos does like to compete with Elon Musk, even in space with Blue Origin versus SpaceX. So I would not be surprised if Amazon actually tried to buy the entire company if it got a little cheaper than here. And since they'd have to buy it for a premium, I kind of feel like 30 billion is a, kind of a bottom in a way. I could be totally wrong, but if they were willing to buy it, if it got, let's just say, down to 20 billion or something, and they were willing to buy the whole company, they'd have to pay a premium, so they'd probably offer around 30 billion. That's just my thought behind it, but time will tell. So I do like it here. Now let me kind of show you how it can go from 30 billion to a much higher market cap over the years, with some simple numbers using margins and things that they have announced themselves. So Rivian's around $30 billion market cap today. Rivian has guided for long-term 25% gross margins, 10% free cash flow margins, and EBITDA in the high teens. So the CEO has said this. They plan to eventually produce millions of vehicles across multiple vehicle designs. So let's just take BMW, for example. They delivered around 2.2 million vehicles in 2021. So if Rivian can produce 2 million vehicles in the long run, we're talking far out, with an average price of $45,000 a car, that's $90 billion in revenue. If they had 10% free cash flow margins, that's $9 billion of free cash flow. If you had a free cash flow multiple of 20, that's an $180 billion market cap. That is 6 times the current market cap. So you can have a 6x on basically what I think 10% free cash flow margins. I don't think that's unheard of. I think it's actually going to be higher than that. This wouldn't include any software net income, any energy storage net income, things that they're doing outside of just the vehicles being sold with those margins. And I also believe the free cash flow margins are going to be far higher than the 10% that they're expecting for the long term, because keep in mind, there is a ton of quarters earnings reports between now and when this happens. And don't you think they're not going to want to give you their best guess right now? They're going to want to slowly and surely increase long-term numbers, guide higher, things like that. So if, I think there's a clear case for quite a multiple on your stock. And even if it took 8 years from now till 2030, if you take an 8-year and you get a 5x on it, I mean, you divide that out, it's an amazing return per year. It's far better than pretty much almost any investment you can make. So I do think it's worth buying. I am currently actually buying a little bit in after hours, and I'm going to wait and see how this goes. But putting it in my drawer and going to not look at it for a long time. That's my plan as of now. Thank you so much for watching. Let me know what you think of Rivian stock. Are you buying it on this dip in after hours? Let me know in the comments. Like the video if you made it to the end. It's been a long video. I really appreciate the likes. It helps the YouTube algorithm. And if you haven't subscribed, please subscribe. I put a lot of effort into these videos, and I hope they're adding some type of value for your investment journey. So if I am adding any value with videos like this, just let me know in the comments. I totally appreciate those kinds of comments. Until next time.